Circle the date, September 17th at 2 p.m. Eastern. That's when the Federal Reserve makes its next big move on interest rates. And that decision could affect your mortgage payment directly. The Fed meets on September 16th and 17th. And on the 17th at 2 p.m., they'll announce whether they're cutting interest rates. Then at 2:30 p.m., Chair Jerome Powell will step up and explain the decision. Unemployment jumped to 4.3%, highest in 4 years. That's why the Fed is expected to cut rates at least a quarter to give the economy some breathing room. So why is the Fed still cautious? The Fed has two jobs: keeping prices stable and keeping people employed. Inflation is still running hotter than they'd like, so while the weak jobs report points to a cut, they won't move too aggressively. So I want to talk about the 10-year Treasury, why that matters for mortgages. Most people think mortgage rates drop instantly when the Fed cuts, but that's not quite true. Mortgage rates actually follow the 10-year Treasury yield, which acts like the benchmark for long-term loans. When investors get nervous about the economy, they buy Treasuries. The yield drops and mortgage rates usually fall too. Right now, that yield has dropped to around 4.08%, pushing rates into the 6 to 7% range. You could say it's a bit of a 6 or 7% situation. So here's the bottom line. On September 17th, the Fed will likely cut rates, but be careful. Because inflation is still sticky, for you, mortgage rates are already trending lower, which means that this could be the window to buy or refinance. I'll be watching it live and breaking it down so you know exactly how it affects your next move. Remember, I'm Joel the Mortgage Guide, residential, commercial, expert financing solutions. If you want to stay ahead on mortgage and investments, hit like, subscribe, and hit the bell icon. I got more coming your way.